We have a lot of content to cover today, and we want to move swiftly on now to our very first panel, where we will discuss the topic of scaling up businesses for international markets. We're going to explore how businesses can attract overseas investment and appeal to international markets. And to help me do so, I have a fantastic panel of three fantastic people that are going to be joining me, bringing their collective expertise from the world of finance, engineering, life science, technology, and C-suite leadership. Ladies and gentlemen, put your hands together and welcome to the stage Mark Bamforth, an investor, Gorgi Egorov, Chief Financial Officer at Zero Avia, and Julie Grieve, entrepreneur and Vistage Chair. Whatever you like. Lovely to see you, Mark. Well, thank you very much. You got up here much more swiftly than me. I don't know how you managed that. I'll have to take some lessons from you, clearly. Before we begin, I thought it would be really nice to go down the panel and just do a brief overview so that, we're talking a little bit about understanding the ecosystem, and I think for this, to understand the perspectives that you each bring to this would be really important. And so, Julie, let's start with you. A brief introduction to your background and what it is you do now.
Okay, so I have been a chief executive, or MD, I guess, for 20 plus years. I started in serviced offices and ended up selling that business, having grown it. I then went to work in serviced apartments, so hospitality, had an idea for a technology business, started a technology business in my 40s as a non-tech founder, so that was interesting, and grew that, raised investment, and eventually sold it. And since then, having sort of gone more into startup world, I'm back in the scale up and bigger business, helping leaders with a stated aim of growth, sort of address the challenges and opportunities in that.
Excellent, thank you. And you did sort of brush over what you've done with Crichton, but we will come to it and dig into it a little bit deeper, because it's incredibly impressive what you did with that company and getting it to market. Gorgi, can you tell us a little bit about you, your background, and the business you have?
So with pleasure. Good afternoon, everyone. So Georgi Egorov, Chief Financial Officer of Zero Avia. We're one of the global leaders of clean aviation, started 7 years ago in California, and the idea was pretty straightforward. So how to decarbonize aviation. So we came up with the idea, well, actually it wasn't our idea, but we perfected it. The idea of the hydrogen electric powertrain, hydrogen electric engine, i.e. you store hydrogen on board of the aircraft, then through catalytic reaction, it's literally two byproducts, electricity and water. So absolutely clean, especially if the green hydrogen has been used. So as I mentioned, we started in the US. In 2020, we got significant grants from the Aerospace Technology Institute in the UK. And therefore, right now, we're 1/3 US, 2/3 UK. Last year, we closed our quite significant funding round, $150 million Series C, and super happy to have Scottish National Investment Bank as now our shareholder, and looking forward to establishing our base in Scotland in Amits. So we'll be the most advanced manufacturer of the most advanced fuel cells in the world.
Wow.
So here in Scotland.
I'm sure there'll be lots of interest from everyone here today and everyone watching at home, and finding out a bit more about the innovation side of things from you as well. Last but not least, Mark, tell us about you and your background and what you do now, if you can. I don't suppose you have an elevator pitch because you've done so much, haven't you?
Just to summarize, good morning. Great to be here. I originally did a chemical engineering degree at Strathclyde and went into the oil industry. I thought my career was going to be in the oil industry till the oil price crashed, and I found myself outside of the oil industry, joined a brewing company, and fairly soon moved into biotech. And I was really lucky to join a small biotech company, US owned, but they owned 2 facilities in the UK. And I spent 22 years with them, really grew up as the company grew up. Moved to the US with them in 2000 to run global operations. And that grew over the next decade to be 12 sites spread around Europe and the US and a little bit in Asia. So really more of a corporate career. And then I left at the time that Genzyme was taken over by a large pharmaceutical company. And at the age of 47, I discovered my entrepreneurial gene and founded a company. and went on to found 3 companies, all in contract manufacturing, so making other people's products for them in life sciences. And over those 12 years as it became, we ended up growing and selling those companies for about $2.5 billion. So it was an incredible second journey, if you like. And as I started the third of those companies, I also was in a position that I could invest in companies, and I started to invest. And at first I did that myself, typically companies with somebody who I knew, who was the CEO or in a leadership position. But I quickly realized that I didn't have the time or frankly the expertise to do a lot of diligence on those companies. So I realized that working with others who did have that focus was going to be much better. And the investments primarily in the US and in Scotland. And in Scotland, working with companies like EOS Advisory or Par Equity that know the field, know the players, and could be great advisors of where there are opportunities, was a much better way to proceed. After the third company sold, I actually joined another investment fund, a US-based fund, as a general partner, so focused on antimicrobial resistance, so superbugs. A lot of innovation in that space, but a lack of investment. So that was, again, another interesting chapter to be on the side of investing and looking at the diligence required in that particular circumstance. I did recently become a CEO again. It turns out sometimes it's hard to shake.
Well, we knew this wasn't going to be a straightforward elevator pitch, didn't we? We knew that was going to...
But in truth, the reason was that I was invested in a company who tried to raise money and were stuck. And the insiders said, we're willing to back this company, but only if I would step in and help to get the company into better shape. So we just closed in our insider round last week.
Congratulations.
And we have life in the company, and we're going to grow it and be successful.
Lovely. So Mark is going to be speaking from both an investor, an entrepreneur, and a mentor perspective on the panel today. And I want to remind everyone, if you have any questions for our panelists, I would like to put them to them throughout the course of the conversation. So please just submit them on Slido, or if you're within my eye line, sorry everyone who's slightly behind me, if you want to pop your hand up, then I'll get one of the team to come. But I wanted to initially start with you, Mark, because you're the founder and chair of Therm Bio, and an investor in life sciences and entrepreneurs, and lots of disruptive companies, let's be honest, both in the UK, as you mentioned, in Scotland, and across in the US. So what then is your view of the way the investment process is slightly different when looking at international markets?
Well, I would say the first thing is that there's a lot that's the same. So investors are looking for teams that have the expertise or know where they don't have the expertise and have figured out ways to plug that gap. Then they look for the technology. Does the company have something that they've protected? They have IP? Do they have proof of concept? Have they really shown that this works? Or is it still really a hypothesis that has to be tested? And then really going beyond that, what is the market opportunity? And certainly in life sciences, almost always that means looking internationally if you're talking to a Scottish company, because a local market is unlikely to support the level of investment needed. So is what plans does the company have? Do they really understand those markets and how different it may be? Just because a product works doesn't mean it's going to get paid for. So is there an understanding of what's it going to take to get into those different markets and get support?
And that's the sort of why now question. Why is it important now? These are the questions that, as a business owner, you're expecting them to be able to answer. It's a bit of a Dragon's Den scenario.
Right.
And so when it comes to the market at the moment, Mark, where is it a buoyant sector? Are you seeing a lot of investment internationally in especially Scottish ideas and Scottish businesses?
Well, again, most of what I do is life sciences, and the last couple of years have been very tough in life sciences. In the COVID years, in 2020, 21, people saw the incredible impact of life sciences. There was a lot of money being put into all sorts of companies, and frankly, sometimes companies get funded that maybe weren't ready for that funding. And then the effect of that sugar high is now there's a down, and the last couple of years have been very hard, even for good companies with good management teams. And so that means that some companies can't proceed, or they have to go into some kind of slow state, trying to figure out a way of breaking that cycle and getting the funding in.
We've had a question come in anonymously, which asks, how does a biotech company founded and anchored in Scotland successfully exploit a market the size of the US, sometimes with limited resources?
Yeah, I think if it's the US, and many companies target the US because it's a large market, it's figuring out how do you get that product and the information that is in front of the FDA, get their advice, the regulators, get their advice as to what's going to be needed. Almost certainly there's some kind of clinical trial that's going to be needed in the US, but often that's expensive, so it's probably not the first step, right? And maybe the second or third step. So having a mindset and then building up the knowledge of what it's going to take, and then finding investors. And there are a lot of investors in the US. That is definitely, even though the last couple of years have been tough, there is a lot of money available. You just got to have the right solution that somebody will invest in.
Well, it feels quite natural to come to you now, Julie, to talk a little bit about your background, because you did very much steer us across it, but we didn't dive into it too much. And I'd like to know your business, Crichton. It was a product that allowed accommodation providers to essentially turn their guest information book into an app. Is that correct?
So it started as a digital guest book, and then over time we learned that the problem we're solving was a really fragmented technology stack in hospitality. And so we built an adapter that meant that the 6 different pieces of software that were required to allow a hotel to offer a digital check-in and key and ordering room service, all the things you do in a hotel, could be offered in one place.
And the product now has international use.
Yep.
So how did you how did you scale it?
Well, I mean, I was really thinking about this. From the start, I had a mindset of this is going to be a global product because there isn't a big enough hotel sector in the UK. And we were very focused on resorts and groups and luxury boutique. So that was kind of when we dove into it, that was going to be our segment. And so the States was an obvious place. Although 70% of the States hotels are chains and we weren't selling to them, even the 30% was big enough. And so actually going into that market, same language, thinking about support times, thinking about sales times, all of that was still a really decent sized market for us to tack, as well as going in our local market and getting the case studies right.
So what did you learn in the process then of how to work with international markets?
I think the sales process in the States was different from here. So I think generally as a buyer in the States, and I'm talking about hospitality here, hospitality generally is very relationship based. They're looking for people to work with them. But in the States, they wanted to go much quicker. And they were advanced in terms of understanding the integrations that were required. They tend to use bigger software out there. So if they're going to deal with a startup, they want to know you've got the integrations in place. So yeah, that was, for me, it was just actually being able to deal with them. And they did very much want to deal with me as the founder.
And I mean, it was Nonius, the company Nonius.
Nonius acquired it.
They and took them international, took your company internationally. But did it sort of impact the way that you were? I mean, you mentioned from the start you knew this was a business that would have to have international appeal. Yep. So ultimately, it affected your business plan. It was right from the very beginning. Did you have to change things a lot when you were exiting the business?
No, really not. I mean, Nonius acquired us for UK presence, primarily customers in the UK. They were struggling to get into UK and our technology, and they basically were able to lift pieces of our system into their system. But I think when you're growing a SaaS platform, you probably are thinking global from the start, which means, you know, if you're looking at where your market is. You're not constrained really in any way by delivery of the product. You're just constrained by, can you sell it? Can you support it?
Thank you. And Gorgie, I have to say, I mean, obviously you're now with Zero Avia, but you were the CFO of Excentia, which is a Scottish startup that raised more than $1 billion and went public in 2021. So what do you see the difference now in comparison to then in terms of raising capital?
Sure, no, that's a great question. So first of all, I think the timing was very interesting. So I think, to Mark's point, we live in a different world right now. So pre-2022 and now, so when the interest rates went up. So long gone are the days when ultimately investors will come to you and say, okay, let's come up with a DCF valuation and talk about which discount we're going to apply and so forth. Yeah, because ultimately there was so much of free money, and I guess also there were a lot of mistakes been made back then. So looking back, I'm thinking there were plenty of companies which actually shouldn't have existed, but they still found investors and were founded. So I think right now, the situation is totally different. So now investors go to you. So I think the whole valuation debate been so far away, and it's so much on the back. And now the questions which we get is, when is your revenue? When is your cash flow profitability? And ultimately, when you become profitable, so what's your cash burn, which is totally different. So back to Excentia. So for those who don't know, thank you, Zara. I think it's one of the most successful Scottish startups. It's the spin-off from University of Dundee, so hence my first connection to Scotland. It was extremely interesting. So it's the AI machine learning drug discovery startup, which I guess became one of the best in the world, and subsequently not only went public on NASDAQ, but also was acquired by another competitor called Recursion last year. And ultimately, when we finalized our Series B, we thought, okay, so we're getting into the big guys territory, we need to go to the US. So went to the US, and then what we realized is the US market is so huge and there's so many different companies present over there. In order to convince an American investor to look at you, you have to be much better than what's available in the American market. So the question which a startup in our case would ask, or anywhere here, so let's say Scottish or British startup who wants to go to US, would be how to convince an investor that you are better, what's so special about you than what you have in the US, and how to convince them to do due diligence over 5 or 8 hour time zone difference, so to go to the site visits in Scotland, let's say in the UK. So we had to be more agile. So ultimately, I think from profitability metrics, so we were by far much more efficient than what was in the US. Number one, we really had to be innovative about our business model. So at the end of the day, so lots of startups, so it's obviously biotech with drug discovery, we're just focusing on one particular part, either on chemistry or biology. We had to be much broader. So overall, just the simple answer is, you have to be better.
You have to be better. And one thing obviously that is emerging that we can't really avoid here is the innovation side. Mark, you did mention innovation. Do they have IP, something that's really important to you? Are they doing something different? Obviously, the sector in which you work, Gorgie, is very much innovation based. And Julie, you created a whole new product, which leads me to ask the question, and I'll put this quite broadly across the panel, is being an innovative business, doing something completely new, the only way to scale? Mark?
I don't think it's the only way to scale, but it's a core tenet of a lot of scaling. I mean, there are other ways to scale. If you can be first in something, then you have a lead. But certainly in life sciences, because it's such a long time frame to develop a product, having the innovation to start with and the IP and then the proof points is critical. And I agree with what Gorgie just said. The question is the timing of when do you go to the US, as most companies will do, because that's the biggest market.
The timing's important. Julie, you're nodding?
I mean, I think business is about not just the product, it's about the service that you provide. So there's an argument that you can follow successfully in scale because you learn from what they've done before you if you're providing better service. But I think innovation, I think there's loads of great ideas out there. And I used to think that because I'm non-technical, the hardest part was building the technology. But actually, of course, you realise the hardest part is maintaining your customer base and growing it, being able to sell the benefits of it, getting people to adopt your product. So innovation across the whole business is important, not just in the product itself.
Thank you. Gorgie, would you like to reflect?
Can I be a little bit controversial?
Yeah.
Please.
Maybe we're saying exactly the same things, but I'm thinking maybe it's my finance guy, coming out of the conservative. Your head can be in the sky, but your foot has to be, on the ground. And ultimately, you look, for example, at clean aviation. There were so many startups with amazing ideas, very innovative. Yeah, so all this eVTOL. Don't know how many of you are familiar. So battery electric, kind of helicopters type, so vertical takeoff landing aircraft, and then came up with this idea. Ideas raised billions, literally billions of dollars, and 3 of them went bust because ultimately there was no product. There was plenty of innovation, to your point, about the product, but they were just solving the niche, 25 kilometer to 15 miles flight from from center of London to Heathrow. Why? Yeah, there's a tube line over there. Yeah, no, literally, and they're saying about Scotland. So innovative, definitely, yeah, but as a product, nothing. So I think it has to be coordination. So for example, for us, as I said, we didn't invent hydrogen electric powertrain. We just perfected it to the level that it can be used in aviation. And by the way, what's the new environment made us look, kind of inside ourselves, said, okay, if we are to get to the revenue stage earlier, what do we do? Yeah. So ultimately from that, we thought, okay, so let's obviously continue working on the bigger engine, but maybe we can monetize our IP in a slightly different manner. And now became much more than just hydrogen electric company, but now supplying spare parts to battery electric, helicopters, drones, and so forth. And then definitely the market conditions made us look into it and came up with a product.
And it was the profitability that led that.
Definitely.
Interesting. So we've had a question come in. Thank you to those of you who are submitting them on Slido. Please continue to do so. If there is anyone in the room that has a question, feel free to pop your hand up and we can send a mic round. We have an anonymous question that's come in that asks, who should you work with in Scotland to access international markets? Are there other exciting markets out with the US, or does it depend on the products and service? So we're going to take the first part of this question, and I think come to you, Julie, initially to ask, based on your experience, how did you begin to sell? And we're getting into the nitty-gritty now. How did you do it, essentially?
So in terms of when I was looking at raising money, I worked with Barclays, Eagle Labs, and they were doing trips out to the US to introduce you to US investors. And also I had an office in London, so I was part of the London Mayor's trip to New York, again around about investment and selling into the US. So there is support out there where you can kind of get yourself funded to go over and have a look. Even now, Codebase are running trips overseas to different places to do that. And I think that's a good first way to go and have a look and make sure you're right. But your data's got to be bang up to date in terms of making sure that it is the right market for you. So you might say, there's loads of hotels in the world, but as I had a specific segment, you want to make sure that that segment is where you're going to go.
That you can qualify it.
Yeah, but for sales, selling into hospitality is very much personality. So referrals, case studies are important, referrals, and then trade shows, because hoteliers are busy. And so they come out to the trade shows to look, and that's your opportunity. So we did a lot of trade shows across the world, and we ended up with customers all over the world, actually.
Mm-hmm. And then, Gorgie, from your perspective as well, then in attracting investment, how do you make that connection?
I think I'm very similar with Julie. So a lot of startups have got inspiration to go to international markets, US or Asia or Middle East right now, obviously, so big center. Now, if you are, let's imagine you're a business in Scotland with one renewable energy production site. Yeah. The question is, will you be interesting to international investors or not? Mm-hmm. Yeah. And if there's no innovation, just let's say solid site, so maybe the answer is no. Now, if you have something unique about this business, maybe the efficiency or the effectiveness or productivity, which can be scaled elsewhere, that's where you go. And then that's where you play on advantages of regional markets, be it US, be it Asia or Middle East. So I think it needs to be a lot of reflection done. Okay, are we really an international player or not?
And on the second part of that question, Mark, other exciting industries or any other exciting markets to go to at the moment? Because it seems like the US is the pinnacle for most, isn't it? But where are you seeing sort of exciting markets emerging?
Well, for life sciences, US has always been an attractive market for therapeutic products, excuse me, because the price and regulation or lack of regulation there means that companies get to typically set the highest price in the world. But it's really about understanding what the product is and where the need is. And so some products, for example, may be targeting a disease state that's more prevalent in Asia, in which case you should be focused in Asia. And Japan has been a great market for products, very exacting market, requiring trials done in Japan. But there are other examples like that where there are specific market segments that aren't spread equally across the world.
So it's very much letting the data do the work for you and dictate.
Well, the data, and then understanding where are there investors or partners, companies that you could work with in those spaces.
Interesting.
And one of the things about life sciences is it's one bucket, but really within it, there's a whole series of sub-segments around different technologies or different disease states that have their own ecosystem, their own investors, their own partners that you could work with. So it's really understanding the space that you're in.
Excellent. We've had a couple of questions that have come in, so I do want to get to them. You mentioned being first in something provides a lead. How do you offset the risk to an investor of being the first to invest in new technology? I think that one's to you, Mark.
Yeah, I've found that a lot of people want to be the first to be second. So they don't want to be the first to be first. They want to follow somebody else. And it's actually quite amazing that there's a lot of investors who say, we're willing to put money into this, we think it's a great idea, but we want somebody else who's smarter than us or more focused on that sector than us to tell us it's a good idea. So then you have to find out who those people are.
Yeah, for sure.
Who are the ones that are willing to be first?
And so how do you find them?
Well, you do it by analysis. So again, you got to look at what stage are companies interested in, or investors interested in investing in. Some are interested in very innovative early stage. Some will want clinical proof of concept. Some might even want late stage products that are closer to market. So you really need to understand the investor and which segments they're interested in. Sometimes I see like a small company saying, I've got a meeting with a giant investor like Nova Holdings, and feeling like they hit the jackpot. And I say to them, they're highly unlikely to invest in you because you're so small. The effort for them to analyze your situation and make an investment, they're being polite to you, because a lot of investors don't like to say no, just like to say not now.
Not now. So if you heard that, that's why. Mark, we have another question from you, and it's come in about the value of impact for you. So it's asking as an investor, what value do you place? Now, whoever sent this in, thank you. We have a session this afternoon that is very much looking at impact investing and what that means, and that potentially, I mean, there should not be a trade-off, really. As an investor, I suppose, for you, the value is in the ROI.
Yeah, that's.
Or do you feel moral obligations?
No. So if you go to a firm, if you go to an investment fund, they're almost always investing someone else's money. So they may have as part of their mission an impact, but in the back of their minds, they're investing somebody else's money, and so that's a big driver for them. When it's more personal, that's a criteria. You don't want to lose money, but you're actually interested in the impact that might be made. And if there are other people who can fund it, then let them go ahead and fund it. But if it's something that needs support and is going to make a difference, then that's something worth looking at.
Interesting. And thank you again for that. As I say, we will be digging a little bit deeper into that this afternoon. But great to have your perspective to kick things off for us on that topic. Another question that's come in asks, do we not need to have a heavy switch of focus in Scotland from supporting startups to scale-ups? Surely too many of our startups fail or sell up too soon. Julie?
I mean, my view on this is that we need to fill the pipeline from top to bottom. We just don't have enough business ideas and everything out there. So I would say for sure there needs to be a focus on scale-ups. There also needs to be a focus on getting people through their idea cycle, failing fast, because then if you've failed, you're a great employee, or you might do something else, getting them further down that pipeline where they are in that stage where they grow, and then making sure that it happens quicker than it does now, because typically, I mean, I'm going to say this and I don't have the data to back me up, so someone can shoot me down, but quite a lot of business, it'll take them 10 years to get to $1 million, and by that time the founder is absolutely exhausted, and so if someone offers them a bit of money, they're like, yeah, I'm out of here. And that is a real loss. And UK companies are cheap just now because of where the pound is. So I think focusing on anyone who's got some sort of business idea, going through that cycle and then getting them down the pipeline, as well as the scale bit, is important.
Interesting. Gorgie, I mean, obviously working in an innovative sector yourself, do you think there is too much importance? And I would say, Scotland does certainly pride itself on being innovative. So are we just not seeing enough of these businesses coming through from bottom of the pyramid, essentially, to scaling up into international markets?
It's an interesting question. So I think a lot. So first of all, I'm not a big advocate of relying on government over here. Yes, I think it's just an easy answer to say, oh, the government needs to know. So we're so lucky to have SNIB over here with an amazing mission and then a super smart team, so we know what they're doing. But I don't think actually the government will be a solution. Let's say, let's set up another sovereign wealth fund and start investing in startups. I don't think it is. What I'm seeing though is a little bit of a Scotland is an amazing nation, it's an amazing country, but the bit of ecosystem is missing. So, for example, it's no secret that in south of England, the emergence of the tech startup, especially in biotech and AI as well, it was because of the emergence of venture capitalist funds from Oxford and Cambridge, and UCL. You've got amazing universities over here. Why there's no fund which monetizes IP of these universities? So that's the
There's
first
an
beginning.
idea right there.
Of course. And I really, really don't understand, because you've got amazing universities over here with a phenomenal track on engineering. You have gaming industry in Dundee. You've got biotech in Edinburgh. You've got engineering in Glasgow, and so forth. So that's the first question. And what Cambridge did, Oxford, by the way, Cambridge was the first one. Oxford 10 years ago raised 1 billion of external money, not government money, and their venture fund, which invests into the startup from Oxford University. I think this thing's a little bit missing, yeah. So and then success breeds success. Once you create the ecosystem of the small startups, that's when the VCs will come over here, because they realize they need to be closer to the startups, rather than the Scottish startups going to either London or US to look for funding over there.
Julie?
I agree with that. I mean, I think there's been a lot of work done in terms of what the terms look like now when you're spinning out of the universities, which is all positive, because it did used to be, in my opinion, punitive when they were coming out and the university was owning 30-40% of their business. I'm a big fan of everybody should share if it all goes well, but there shouldn't be a cap table that kind of constrains you as a founder when you're into that fundraising cycle. And I think I'm going to suspect that some of the investors in the room will go, actually, that's what, we are looking at that, we are focused on it. But you're right, there's not like a university fund anywhere. And, not to get too political, but our universities are really struggling right now to survive. So potentially they're not in a state of mind to be thinking about innovation in that way, in terms of investing in the businesses that come out of them.
Maybe it's about PR and a bit more vocal. So Accentia's investment for University of Dundee was something like 100 million plus.
Yeah.
Can you imagine? So they realized they were sitting on 100 million plus.
Yeah.
For a university, it's massive money.
Yeah.
How many people in Scotland know about that?
Yeah, you're spot on.
Well, if there's anyone who works in the educational sector, perhaps you might want to catch up at lunchtime with Gorgie. I'm sure there could be some potential there, or at least some connections and networking to take place. We've just maybe got time for one more question that I'll put to all of you. If anyone does have a question, please do raise your hand. As I say, we've got one at the front. Thank you very much. Do we have a roaming mic available? They're winging their way to you now. Thank you very much. And if you just want to speak directly into the mic, that'd be fab. Thank you.
Thank you, Poonam Malik. Good discussion. I suppose for your point, Georgi, you mentioned Oxford and Cambridge or Imperial Fund. the key probably to success there was the private money, because it was invested on the private terms, and which you said that it shouldn't be expected of the government, and that probably is the key. People become reliant and the criteria and other things become different. And it's not that it's not been happening, it's been thought about even in the university sector here, and there are universities like Strathclyde, like Edinburgh, to some extent now Glasgow as well, who invest their own, and it's been happening since 2012 and 2015. There's just not an external fund on that front. Strathclyde has been investing since 2012, and the companies are there similarly. Edinburgh, they did from 2015. My point for a question for you, Mark, is that you've been investing across the pond on the other side, and now in Scotland, which is your mission to support the ecosystem, which is very good. Thank you. What is the key differences in the investor mentality or the investment attributes that you look for in the companies, or broader in the ecosystem that you've seen across generalist? And the second is, naturally, you've chosen the life sciences. And the question there is, what is the mindset and attributes that you need for a life sciences investor versus a digital or a software product company that has an ARR from the day one? And how do companies offset that when investors see that?
Lots of questions. Thank you.
Yeah, I'm not sure I can answer the second part since I've focused primarily on life sciences, but I think there are a lot of similarities. I think the biggest difference is the willingness to take risk. And, excuse me, and combined with that, the scale of risk-taking. So, for example, I personally, I hate the idea of failure. That troubles me if a company I'm investing in isn't going to survive. That really bothers me. And somebody said to me, well, investment shouldn't have a heartbeat, meaning it should be unemotional, right? I don't know how you do that if you're an individual making those decisions. But again, if you're a firm making those decisions, it has to be part of the ethos. And I looked up last night Flagship Pioneering, which is a Boston-based life sciences company, and they've been around for 25 years. They've launched 140 companies. 346 investments, 149 exits, 20 failures, including 4 in the last 3 years. And so they're willing to go into spaces that they don't know are going to be successful. They think they should be, they think it's a great idea, but that willingness to take those risks is core. And the most well-known, if you didn't know it, of their investments was Moderna, who sold 36 billion COVID vaccines over the last few years. Mm-hmm. But they invested in that company going back over a decade. Mm-hmm. So it's a long road. But again, if there's something there that's really going to make a difference, it will be successful. So I think that's the key, is their willingness to take risk and to make big bets when they see the opportunity. And I don't think there's as strong a risk appetite or willingness to do that in Scotland or the UK.
Certainly serves to illustrate why everyone is so focused on the US market, or so many investors are, because they've got more money to risk, don't they? Thank you for the fabulous question, and thank you to each and every one of you for your Slido questions. They were brilliant, and I think this has been such an ambitious panel to kick off with. It's kind of really setting the bar for us today. Unfortunately, that is all we've got time for. Big thank you to Mark, to Gorgie, and to Julie. Thank you very much.